Welcome to Punch Card Investing, a weekly show dedicated to all things value investing. Whether it be analyzing companies, pitching ideas, or discussing moves by the best investors in the world, we're trying to get one step closer to punching an investment off of our cards. Let's get started.
All right, let's get started. A lot of stuff going on in some of our favorite stocks here on Punch Card Investing with Alibaba, and we'll talk a bit about SRG as well. So a lot of things happening there, and certainly a lot happening with Alibaba in just the last week that we're learning about. So we'll definitely be getting into that. You know, Tom, I feel like I just talked with you because I did just talk with you today, right before this, or a few hours ago. We filmed an episode for your podcast, so excited for that to drop. Yeah, I haven't seen Karan in a while. You've been traveling around, right? How have you been?
Oh, good. How have you been, Mr. Very Good Credit Score?
Yes, thank you. That is a Twitter reference. Tom was asking for questions for the show, and Tom actually called me Jack Mr. Business Duffley. I'm like, okay, I've never been called that before. And someone said it should be a Mr. Good Credit Score, and I corrected it. It's actually very good credit score.
We should have a competition in the comments, like the best title for Jack.
Yeah, yes. A lot of them, the alternatives mostly had to do with debt. But anyways, before we get into today's video, just need to remind everyone to make sure to subscribe if you haven't already, so you don't miss next week's episode and the many weeks after that. We try to put out an episode every week. We did have to skip last week, unfortunately, but that's pretty rare. We typically will have an episode every single week around this time. With daylight savings, timing can change a bit, so apologies for that for our live audience. But if you are here live, always feel free to leave some questions, comments in the chat, and we'll try to get to some of those as we move along. And also, be sure to check out the links in the description as well. You got some discounts to Seeking Alpha and to ShareSite. You can check that out. They have free versions as well. If you use our link and then eventually switch to a premium plan, we might get a commission. So we'd appreciate if you took a look. Otherwise, with that said, I guess we should start with Alibaba, right? Because that was some pretty major news coming off of what's been a rocky couple of years. And it's really since Charlie Munger bought the stock, it's just been a pretty harsh ride down with occasional blips back up. Now we're hovering around the $100 mark after a pretty major announcement here. I'm pulling up the filing now that they're planning to split up into 6 major business groups. That is, each of the businesses that Alibaba currently owns will be separately listed. So essentially spinning everything off. And that caused the stock to surge something, I think, like 15% in a day. So the market seemed to like it. But then again, we've seen some major moves upwards and downwards in Alibaba seemingly every week. So we'll see how much momentum is carried there. I don't want to talk. I'm talking too much like a day trader right now. Anyways, let's get back to this. I don't know what your guys' initial reaction to this was. It seemed to be pretty positive across the board from investors, but wondering what your guys' thoughts are.
I think we should pause. We've just got a world record super chat, I think.
We've got
a couple of super
chats. Oh,
chats.
my goodness.
Thanks, Dart.
Appreciate it. I was off on the other tab here. Thank you, Siddharth, for $100 super chat. That is definitely a world record. He says congrats to Karan, best wishes, and thanks. You know who this is. Tom and I have also chatted through Matt Peterson. Won't leave Jack out. Hi. Keep up the good stuff. Cool. Well, thank you.
Man.
Great. Thanks for that.
We also have
another one.
Not to be overshadowed. We got another from KK Investing. Appreciate it. Saying Tom's channel is moving markets. I don't know. Maybe.
I hope not. Yeah. That wasn't the intention.
Yeah.
Certainly.
When did you
release some news with Matt Peterson saying he sold it? I guess Tom is on CNBC's level now. So financial news, moving things around.
Yeah, we should get into that after Alibaba because Matt's letter has since come out as well. I guess that podcast was a bit of a precursor to his letter in many ways, but he's got like a valuation breakdown and stuff in his letter, a little table of calculating liquidation value. So
right on. Okay, well, yeah, snapping back to Alibaba then. Not sure if you guys had like an initial reaction here. I, I didn't feel too surprised seeing this because I think, like Tom, you're actually talking about in some of the analysis that you've done. You've talked about the sum of the parts valuation, and this really kind of goes to that theory that that's really what Alibaba is. It's a bunch of sub businesses within an overarching structure. And maybe this will just make it easier to value those things since they'll all have public listings. So that's where my mind kind of went. Not sure what you thought when you saw this.
well, yeah, I think that's one of the things they may be trying to do is I don't know, make the value clearer to the market. Although the stock market isn't a stupid place. Like there's some reasonably intelligent people out there who you would think would know how to value companies. But I think we should also make it clear they're not all going to IPO straight away. They'll each sort of twist around if and when they want to do that at some point in the future. But they will sort of separate companies, separate CEOs, separate board of directors. Yeah, I'm not too sure how it's going to play out really, but pretty major move.
I wonder how much of this has to do with maybe regulatory pressures or something along those lines. Just trying to move it, trying to move away from like a giant conglomerate target. I don't know if it has anything to do with that, but granted, it's all still technically going to be within the same ownership. But maybe that limits that risk.
I mean, it's at least less regulatory scrutiny as a platform company. I mean, it's pretty much the bear market where Chinese stocks kind of started with Alibaba. And I feel like it's kind of ending with Alibaba too. Like with Jack Ma's speech, it began, and then with this restructuring, I think we're starting to see like a bit of an inflection point for regulators backing off of Chinese tech. And well, this is the result of it. Yeah. How do you guys see that?
Well, it might be a little too early to call that this is the end of the the bear market, but maybe it is. Maybe it is. But wasn't it? I feel like the stock was at 115 just like a few weeks ago, and it's not even at that level yet. It's crazy just seeing how much it bounces up and down. You get some bad news about something between China and the U.S. or whatever. You get some bad fundamental news, then you get some good fundamental news, and just keeps bouncing back and forth kind of around this level. And yeah, I wonder if this is going to be the real key to break it out of that. Maybe, but it's kind of hard to say because it's still within the same general macro environment as before, I would think. And that seems to be what's driving a lot of the pricing lately with China. Not too much with the fundamentals. At least if I had to make my guess for as to why stuff's moving the way it is.
It wouldn't have gotten so cheap if it wasn't for all the other stuff. I mean, if it was just based on business fundamentals, you wouldn't have never gotten that price of like, I think it was a bit below 200 billion. So
right.
So yeah, I don't see Ant Financial mentioned here though. Maybe am I missing it? Or?
Well, I think the is it other investments mentioned somewhere in there? I think it would all just live in the Alibaba parent company, which yeah, I guess there's no change from current. That's how I imagine it would work. What do you think?
I mean, they didn't mention it, so I'm like, there must be a good reason for that. And I think I'll just probably add on, like the layering. It's very clear that, they've kind of structured the narrative in a certain way. Like Jack Ma comes back, they announce a restructuring. I don't know, as someone who's just like been observing this for like the last 2-ish years, it just seems like that's the kind of reason why I thought, it's kind of the end of the bear market for China tech. It's because, again, the narrative seems to have changed. The reopening. Now it's all about the reopening and consumerism and everything. So
fresh financial year starting today, I think.
Might be starting in Feb, yeah.
But is this going to be enough to kind of shake away that sort of macro environment narrative that just has overshadowed so much in the last couple of years? Maybe.
That's
I
above our
also
pay
kind of
grade,
wonder.
I think.
I also kind of wonder how long this will take to actually shake out. This is a lot of moving parts right here just to get through the actual setup, and I wonder what that would look like from a regulatory perspective, and just from like a back end administrative business perspective, preparing every single one of these companies to go public separately. That seems like a big deal. Because we're not talking about a small company here. We're talking about all these companies would be quite large in their own right. It just shows you how big Alibaba is already.
One perspective that I haven't heard much about, like at least I haven't heard it anywhere else, this kind of seems like it's a pseudo delisting, because if the company is listed on the American exchange, right, it keeps spinning off shares and it has them all listed in the Hong Kong exchange. So what exactly does the person holding like Baba on the New York Stock Exchange exactly hold? They hold Hong Kong listed shares held in this VIE structure. So it's kind of like how KWeb has, it's, although it's American listed, you're trading it in dollars, but it's holding Hong Kong shares. It's kind of the same structure. That's something I haven't really heard much from any other platform or anything else. How do you guys view that?
So you're saying it's sort of removing these portions from one structure and moving it into another is kind of what you're getting at? Or
Yeah, so it's like you're holding Baba, which is on the New York Stock Exchange,
right.
but it's holding shares of the spin-off companies, which are all listed in Hong Kong dollars on the Hong Kong exchange. So
moving the value from one exchange to another in a way.
kind of, yeah.
Or I should say the derived value.
It's like the delisting without delisting.
Yeah.
Yeah. So your take, Karen, is that all of this is a net positive. There's no major negatives here for you.
I see it as a net positive because they get more access to liquidity. So that's the only positive that I see to it. Everything else is like neutral, sort of, not negative.
My knee-jerk reaction seems like this would be administratively very hard, but then again, so would just keeping it all under one umbrella. It's just a lot of stuff going on. So I don't know if it would really change a whole lot from just like a company perspective trying to run all these things. Maybe it would make it easier to further separate them out with each having very distinct teams, even more so than now. But I think just that initial setup is just going to be a lot to get through. And that's what I'm more unsure about for as to how long that's going to take. How expensive is that going to be? Is there going to be friction between certain things? It's not quite as easy as just signing a few papers and listing. Be nice if it was.
Yeah, board of directors aren't cheap. So
yeah,
if you need 6 sets, I mean, it's going to cost.
And they got to know what they're doing. You get a few bad ones. That's not going to be too good either. I imagine a lot of it will be internal, but still, it'd be funny if every board is the exact same people.
Yeah, I mean, like Alibaba Group in the Q&A session they had, I mean, they said like they're still going to be controlling shareholders of all these subsidiaries. So if they start going too far off the rails, the Alibaba parent group can pull them back still, while they're very major shareholders.
One would think.
Yeah,
there's a lot of obscurity about everything. Yeah, I mean, how the golden shares treated, the golden shares that the government recently acquired in Alibaba and Tencent, like how are those going to factor into these spin-offs? It's not clear, and none of the analysts asked that question. So, yeah, if anyone knows, please let us know in the comments.
we need those high-level people, right?
Yeah, we got any high-level people in the chat?
We need connections with high-level people ASAP.
Yeah.
Does this news have you guys wanting to buy more, or does it change the equation at all, or is it just you'll take it and we'll see what happens?
Yeah, I'm probably on the wait and see camp, to be honest.
Yeah.
How about you?
I would probably be more comfortable switching over slightly to KWeb, because if the subsidiaries are all spun off at some point, they'll probably be included in KWeb. So just kind of hold that. As long as like KWeb and Tencent, KWeb is not like 50% Tencent and Alibaba because of all the spin-offs, it's all okay. Yeah.
You are a KWeb aficionado.
It's a concentrated-ish ETF, which is rare. So
Yeah. If they were all equally undervalued, which of the do you have any of those 6 that are kind of your favorite business unit, or not really?
I would stick to Taobao Tmall because it's just that's kind of what the basis has been so far. To get into Alibaba, like I get it, cloud has the potential. Everyone's talking about cloud and the growth, and it's just starting. And within the next 3 years, the cloud will triple. But that'll be like a wait and watch. And I would just like to stick to something that has been successful in the past. So kind of going with the Taobao Tmall business. What about you?
I tend to agree. Yeah.
You don't want that.
It's where all the cash flow comes from.
But you don't want that flashy upside. The flashy upside, high multiple.
Yeah. Well, it's hard to say. Like, like a lot of people are out there saying, Alibaba Cloud should be worth like 10 times sales or something crazy. But I don't know. we'll see what happens when it's actually public, if it does IPO at some point.
The global digital business, the international business, that's also very interesting. Lazada and Trendyol, Daraz, AliExpress. That would probably be the second most interesting one. But
definitely. Yeah, seems to be certainly much faster growing than the China commerce businesses, but it's not kind of at a really profitable scale yet.
But then it's a goddamn retailer.
Yes, this is true. Well, some parts of it.
Super chat, by the way. Missed it.
From Jobu.
Is that one of those ones that's a sticker again?
Probably. Please describe what the sticker is, Tom.
One moment.
You're our chief sticker analyst.
I'm not on the stream right now. Hang on.
Our CSA.
What do we got? No sticker. Just $1.99.
I appreciate it, Jobu.
Well, thanks, Jobu.
All right. So then, what now? What do we do with Alibaba?
There's someone who has a question about leaps. We can make a comment about that. I mean, so in this situation, leaps probably would not be ideal because you wouldn't know how the spun-off businesses are treated. Right. So, you're safer holding the shares. At least that's my thought. That's what I would do. So, yeah.
Yeah, because
but if the sorry, go ahead, Jack.
No, you got it.
I was going to say if something's spun out, wouldn't that adjust the strike price generally?
But depends on if the spin-off is in terms of shares or is it in terms of cash. If it's spun off in terms of shares, what value are you going to ascribe to it? How much is going to decrease by? That's all variables you might have to deal with. It's unknowable, yeah. So leaps are best to go for if in situations where there's no dividend, there's no spin-off. Basically, it's just straight. You expect capital gains, and
nothing that would trash the share price, even if your return as a normal shareholder wouldn't really be affected. But as a options holder, you might lose if all that value is taken out of the share price and is moved into a dividend or something, right?
Yeah,
true.
Be careful. Tread carefully, folks, with options.
Yeah, anyone who's holding cash secured puts doesn't have to worry anymore. I don't think we're going to see it go below 100 again.
It's a bold claim. Bold claim.
Not investment advice.
Yeah, I mean, he is a fund manager.
Right, yeah.
Sort of. Not exactly a fund, but...
we all manage our own funds, don't we?
Struggling. Starving.
Just need a bit of scale.
Need some more super chats out there.
And more than $100 super chats. Those are great.
We need some Malaysian ringgits here. Okay.
The
Any
media,
other
the
questions
media,
you
though,
guys see?
the media is all over this though. With I on our like punch card email, like I have it set to all of our punch card holdings for the punch card portfolio, and normally you get like 1 or 2, maybe 3 emails from all the companies that we have in there, the 5 companies. And then like the last 3 days, it's just been like 10 emails a day about Alibaba. It's been quite obnoxious. So the media is definitely on it, as they always seem to be with China, usually very negatively, but now it's been all of a sudden very positive or confused. So
At least
I don't know
it's
if
not
that's
uninvestable. Yeah.
Yeah, uninvestable. Right. Exactly.
Any other questions? Yeah.
Any other comments on Baba? That's kind of the big news. It's just weird because in one way it's like it's very fundamental, and at the same time it's really not. It's all the same businesses. It's nothing new, but it's just they're organized differently. But it feels so much different, and it does change the equation at least in some way. But it's just kind of weird because it's just like a structure thing, and structure can make quite a difference for a variety of reasons, whether it be liquidity of shares, the delisting point you mentioned earlier, Karan, that's a good one. And just overall like executive organization too, and all that good stuff.
Yeah,
The
part
next
of me
earnings
one.
event. Yeah, go ahead.
I was gonna say, part of me wonders if some group of investment bankers with a fancy PowerPoint walked into Alibaba a few months ago with this idea, but we'll see how it works out, I guess.
Are you
All
guys
right.
expecting anything in the next quarterly earnings call from the analysts? Any questions that you guys are looking forward to?
Yeah. Do you recall what the what period of time is the next quarter actually going to cover?
The Q1, right? Would it be? Oh, we have super chat.
Happy birthday.
Thanks, Ma. Super chat from Mrs. Duffley herself, wishing me a happy birthday, which is tomorrow.
It's today
year,
over here.
Yeah, for both of you
In
guys,
3
it's my
hours,
birthday
right?
right now.
2 hours.
But yeah, I got 3.5 hours or so, or sorry, 2.5 hours, and then I'll be there. So almost there.
Very nice. Go, Miss Duffley.
Yes, it's been a while since we've seen her in the chat. So thank you. I'll be getting back up to Chicago sometime soon, but it's not going to be this weekend. But so the weather's warming up in Chicago, so it's time to get back up there soon. But it is premier weather down here in Houston right now, so it's tough to leave. I must say, I really understand the snowbirding thing. But thank you as always, Mother. All right. Karan, is your mom watching right now, or is it too early?
It's way too early. She'll catch the stream later, yeah.
The sun is coming up.
Yeah, it's a lot brighter now.
If she was watching, she'd be smashing the like button, though.
Yeah, well, as she says, when I ask, she does it, so it's just tremendous. Apparently, it's definitely been. It says Hoda Prime says it's been 365 days or 364 days since we did the Punch Drunk portfolio. That's when we started it, and we have looked at it since then, very infrequently. It's mostly cash.
It puts our portfolio to shame, so
yeah,
we don't.
It's actually done pretty good relative to other stuff. It's like I feel like it's 2/3 cash.
Jack, you got another super chat.
My goodness, is that our man Siddharth again? Wow,
It is.
Thank you. Wishing me a happy birthday this time with another super chat. We're getting showered with riches today. Appreciate it.
They're contributing to the Seritage bag holders group
recovery fund.
Should we talk some Seritage now?
Maybe as a transition, I should have you know that I am officially out of both Baba and Seritage. That's because I'm out of all of my public stocks right now. I've let you guys know recently. But besides my retirement funds, I'll be kind of going over it on my net worth update tomorrow for the first. But I actually sold all of my publicly traded stocks that aren't index funds in my retirement accounts, and I now have all that cash ready to go for a combination of some debt pay down and then reinvesting into my current business that I bought and then potentially another business down the line. But kind of trying to consolidate things even further, and decided to make that move recently. So I'm no longer a shareholder as of a few days ago for both of these. Granted, they're pretty small positions relative to what I got going on now. So for full disclosure and context, I suppose.
Is it just Burke now?
Yeah, I have like 2 shares of Burke B for the annual meeting. The rest is cash or my existing business. And I'll be selling my Indianapolis rental as well, and that'll be another, call it 150,000 in cash right there. So very much consolidating and moving backwards, aging backwards in the investment journey.
Covered in much detail on the podcast.
Yes, we did. So stay tuned for that as well. More about the kind of the rationale in that too. And I enjoyed our conversation, Tom. I think people will enjoy the podcast, though. I don't want to toot my own horn, as they say.
Tom, when can we expect the podcast to drop?
Well, I've sent it off to my man George in Greece, who edits the podcasts. He's usually pretty good for a 3 or 4 day turnaround, I reckon. So I'll have to send him this clip so he knows that. But something like that. Maybe definitely the next week, I would think.
You got the international editing crew now. How's it feel, Tom?
Yes. It's cool. Yeah. We've got a worldwide couple of people.
Worldwide, how many?
I've got one guy that does the podcast, and I've got 2 that do the main channel videos, kind of alternate between.
That's a pretty big change, because I know you were doing everything yourself until very recently, right?
I was, yeah. It was a pretty major time drag.
Yep.
So yeah, saves a bit of time. Hopefully the video quality is a little better than me editing as well. Yeah,
I've noticed the audio quality.
You know.
It seems like the audio was mixed a bit for a few of them, and it was noticeably more pro sounding on a couple. I did notice that pretty recently.
Yeah, hopefully the more recent ones are better. I know I was a little bit all over the place with the audio levels when I was trying to record it separately in Adobe Audition myself, but hopefully it should be much more consistent now.
Good stuff. Congratulations.
Yeah. My YouTube expenses have gone up dramatically. But hopefully we can get some growth.
You're playing the long game here.
Yeah,
I know the feeling.
For sure.
I have a good chunk of my editing done in Lithuania, so also part of the international crew.
Yeah.
So yeah.
Jack, you got some questions in the comments.
Oh, from our man Jason. What are you going to do with the cash from the business once debt is paid down back into stocks, or don't yet know yet? So this would be further down the line. I'm trying to deleverage this year. So I'm still focusing on that. However, as I was kind of talking with Tom about on the podcast, I definitely want to, I'm not going to say no to what I think is a great deal. However, I'm trying to be much more selective with that. So if I can get something, at 1 or 2 times free cash flow and it's adjacent to my current business, or I get some sweet seller financing terms or something like that, that would probably be enough to pull the trigger. But I'm trying to kind of work out how exactly I want to prioritize it. It is kind of dependent on deals as they come up, but otherwise, just any extra cash is still going towards debt pay down and getting rid of some of the higher interest stuff and just getting some space, more equity, and everything's going to ideally a good place, regardless of whether it's debt pay down or build the cash pool now and getting ready to go. And I see this other question here. I'm not, am I waiting or preparing for a recession? It has nothing to do with market timing. I don't know where stocks are going to be 6 months from now, and certainly not a month from now. It just happened to be, I think I should move this into a different opportunity, focus more on what I've got going on now rather than kind of dilute my attention and money into a bunch of little things. It's just, I don't think it makes sense given what I'm trying to do. But it'll make sense to get back into stock soon enough to get back to Jason's question. Just once I get more cash flow up, once I have a nice little business portfolio going, and it would make sense to get more defensive again. That's what I'm kind of going for. What do you guys think?
Very nice.
Love it, hate it, don't care.
Makes a lot of sense. Yeah.
I think it makes sense.
Makes a lot of sense. Yeah.
We'll see how it goes. I do feel slightly better having kind of this. It almost felt like a burden at some points having the stock portfolio, just because of the return on invested brain damage just was not there. I have all these little holdings, and it's like, okay, what if I make 20% on these? Like, yeah, it'd be nice, but it's really not moving the needle. So that's why I'm really trying to put my money where my mouth is with consolidating, and that goes for my attention as well. And whatever limited time I have, I want it to be going towards something I think has a lot of upside or is just more suited towards my goals right now. So that's been the big change in the past.
Definitely Ventures IPOing soon.
No, I don't know about an IPO, but I have inquired with some folks about raising cash for certain deals, but like if I come across a great deal and maybe I don't have the cash for it, I'd be interested in bringing on some equity partners potentially. And
some high-level people. Some high-level people.
Yeah, right. Some high-level people. But that's a lot more opportunistic, and it's just got to make sense for everyone. It's not like an explicit goal. But yeah, so without getting too much into that, I guess, should we talk about?
It's like a good teaser for the podcast. Just saying.
It is a good teaser. I don't want to spoil everything. I guess it doesn't matter too much. It's everyone's going to watch Tom's podcast regardless. They're not coming for me. They're coming for Tom. So,
I mean, now that it moves markets.
Yeah.
So.
And with that said, let's get into Seritage. So, I mean, we had the major news recently that Matthew Peterson, a Seritage whale at one point, sold out, which was pretty significant news in the Seritage world. I don't know if Tom, you want to kind of explain what you learned there with what he was saying on your podcast?
Yeah, sure. Just for full transparency, for everyone wondering, Matt and I had been trying to line that podcast up for a little while, and if anyone's listened to it, you would have heard us talk about the Turkish earthquakes that happened a little while back and all the damage there. So we actually pushed the podcast out a little bit. When I initially planned to do the podcast, I expected it to be sort of an update. I guess it was still an update to what I'd done with Matt in the past. I expect him to be quite positive on Seritage, really. And I had heard a rumor from a friend that he'd perhaps sold out of Seritage. I confirmed that about 5 minutes before we hit record when he joined the call. So that was fresh news to me at the time of recording. So I was, it was a bit of a surprise to me as well, to be fair. But yeah, long story short, Matt's out of Seritage. I think he had about 1%. Also 1% exposure to Seritage, because some of it was just straight up shares, some of it was options he had written, but he was a reasonably substantial shareholder in the company. He kind of just is of the view that the situation's deteriorated a little bit in terms of how much cash he thinks Seritage can liquidate. He was thinking it would maybe be a little lower than the estimated range of, I think, $18.50 to $23, maybe $15 or something. But he's turned a lot more negative on it. So his letter to investors actually came out not too long after the podcast. If you look up his letter, he's got kind of a table of assets, liabilities, and then like a per share liquidation value. He's got approximately $7. So that's kind of what he's thinking. I don't know. I'd be interested to hear.
Find the letter.
I think if you just go on Matt's website, just search Peterson Capital Management, I think it's
Yeah.
called, or Peterson Funds. You should be able to find it. You may need to request access, but if you're on his mailing list, I think you should have received it. But anyhow, yeah, it was a major surprise to me. He was far more negative than I would have thought. I mean, I know he's done the work on it and he's followed it for a long time, but I also know other people that I think have done the work on it and have followed it for a long time that have much more optimistic valuations. So I'm really not sure where I stand on Seritage at this point. I probably need to go through the valuation exercise myself again, but not sure what you guys think about it.
It's about the valuation, right? It's about the liquidation trust. That was kind of the key thing, that the
was
key
part of
insight
it,
that I mean, that was his whole point, that it'll trade at a discount because most people can't have access to it. I think that's kind of what really was different than anyone else's thought that I've heard of. Jack, what do you think about that?
I mean, it definitely sounded the alarm bells. It's like, wait a second. It was very surprising given how it seemed like it was all of a sudden just he decided, you know what, I've been completely wrong, or like some sort of catalyst triggered it, but I don't see a real catalyst. It's just like he made some realization at some point, because up until like, you know, seems like days before we learned this news, he still had a lot of positive things to say about it, that they were buying. They obviously still held it. It seemed like a very strange turn so quickly, but it definitely has me wanting to take a look at the valuations again. Tom, we should try to do something together there. Maybe we can kind of split it up with the 70 or so properties they have left.
Sure.
Because I would be kind of curious there, just looking at some scenarios. If it's a whatever cap rate plus or minus a few percentage points in either direction, what does it look like in all those scenarios? Because that's a pretty big drop off from, you know, the 18 to 24 or whatever that the company was advertising as their target. But 6 to 7 is a very different story.
Yeah. I mean, the leverage obviously plays a role. I'd have to do the exact maths on it, but I think it's ballpark like a 25-30% drop in asset value would have that bigger drop in the equity.
Mm-hmm.
So yeah, it sounds quite dramatic, I guess, but the leverage will do that, I suppose.
Right. Yeah. I guess the move required is not as dramatic as because it's leveraged in either direction, which makes sense.
Yeah, but I don't know. It'll be interesting. Like we've also recently had another little nudge up in interest rates, but we've also had Seritage come out with their full year earnings, I think it was. There was some commentary in there around, we might have to pull it up, but I think it was basically saying if current market conditions, you know, persist, it will impact their ability to meet their distribution range that they've put out there, but they haven't come out with a specific update to that range. They obviously met that big debt milestone kind of target of 800 million not too long ago. Yeah, and it seems like there's a little bit of a pattern actually for those kind of following along. Of any time they do any big debt repayments, they seem to put out press releases roughly at the start of the month. So I don't know. Maybe we'll see something in the next week or so.
An April Fool's letter.
Yeah, maybe.
He paid off all our debt. Oh, just kidding.
Jeez.
That would be great. Actually, no, that'd be awful, but great at the same time.
Yeah.
Well, has the Peterson news and any new perspectives from it, has that caused you guys to do anything? I sold out, but for mostly other reasons that happened to be around the same time. So I didn't look too deep into it afterwards as I was selling anyways. But it does have me curious just if people were missing something, or if it's really just the market is dipping that hard and people didn't realize it.
Yeah, Karen.
I sold out. Yeah, I had recently bought back in, but then I kind of had it as a cash equivalent, and I kind of sold it out. Just use the cash elsewhere.
What did you roll it into? Everything, or
a little bit of Paramount, a little bit of Berkshire, here and there.
I see. So that was enough.
Yeah, I think cash equivalent I think cash equivalent was a reasonable way to look at it. I am also out of Seritage. Again, probably not fully for the reasons you might expect. I'd be lying if I said that the conversation with Matt didn't have some impact, but we've paid off a fairly reasonable amount of, or all of like the floating rate debt we've got on our house at the moment. So that's been a major source of, we've funneled a lot of cash into that. Like the whole Silicon Valley Bank thing has caused stock prices to go down on companies I'm interested in. And I'm really for the first time in a position where I haven't had the cash lying around to do stuff. So that
And I know how it feels.
contributed a lot. Yeah, that contributed a lot to that decision as well. I'm not ruling out getting in it again at some point. I would just have to redo the valuation, and I guess it depends what happens with the price as well. But yeah, that's where I'm at the moment.
I wonder if Brad was in
I
it as
think
well.
Brad
Right?
was in it. Yeah.
I wonder if he is still.
Well, we have it in the punch card portfolio.
Mm-hmm.
Yeah, the punch card portfolio, isn't it?
It's in there.
It hasn't really caught many breaks. Yeah. Oh, we have a good criticism from Sam. Maybe we can wrap up with this. My only criticism of the panel is there are long-term value investors that are selling. Dun dun dun! Who got him? Come on, clap back.
You can't win them all, Sam. Yeah. We'll try to do better.
I don't know. I'm going from call it 15 times earnings to 2. Does that count for something? That's value oriented. Yeah. Anyways, he says all love.
Yeah. Did we miss a super chat from Jason?
Oh,
it was about Carvana. Yeah.
Says Carvana has turned the corner. Very interesting things happening later this year. Stay tuned. Oh boy, Carvana, a fan favorite for half the audience, and the other half very much not. Maybe not half. But, we'll have to. I mean, I haven't looked at Carvana since probably the last time we talked about it, which was a while back. Has something changed, Jason? If you let us know in the chat.
There was something about a debt swap that had come up recently that they're trying to do something with bondholders. Yeah.
Interesting.
A shell game?
Jason will know a lot more about it than I do.
Oh, yeah, I wonder. Maybe this is a good one maybe to end on, since we're talking about stuff we just sold. What is your highest conviction bet from our friend Eunice?
Well, Jack sold out of everything, so
yeah, Houston cleaning,
carpet and steam cleaning, steam cleaning, tile cleaning, upholstery cleaning. We just did some franchise restaurants here in town, and that should lead to some more business within a current owner has a few locations, so that could be a nice little vector into the commercial side. So it's all going well so far. But yeah, that's the current bet, and more small businesses probably in the home services space would be the next thing to look at, as well as potentially acquiring a competitor. I'm looking at one right now that just significantly dropped their price and haven't been able to sell it for a while, and we're trying to work something out there potentially. So that's another reason to try and raise some cash. Rather than more and more and more debts, eventually you gotta be a little bit careful at some point. So I'm working on that right now. So yeah, that would be my highest conviction at the moment.
Nice.
What about you
my
guys?
single largest position is Baba, so it would be that.
Well, now it's
like
going to be
20% of the portfolio.
If it's going to be split up into 6 little bits, is it still going to be Baba? I guess if they still own it all, it wouldn't make too much of a difference. Yeah, I wonder how that's going to work. Are you going to get dividends that are the shares, or is it still just going to all be within one umbrella? That will be interesting to see.
Or I don't know. Once it gets to like maybe some price, I'll just sell it off and be like, done, finished. I'm not dealing with this anymore.
True.
Make
Everything
it
for a
another
price.
heritage. Yeah. What about you,
Tom?
Sorry, I completely missed that conversation. I just messaged in our private chat to say someone's just driven up the driveway and I probably need to go.
All right. They're just asking highest conviction bet.
Oh, highest conviction bet. I mean, my largest position forever. Well, not forever. For a long time now has been Berkshire, so I don't know that that's highest.
Now
I
your
was
house?
hoping for Thor. I was so hoping for
I
Thor.
wanted him to say his house. Hanging off the bet.
Yeah, probably not the case either. But I don't know. That's a boring one. If I had to pick an individual stock, I mean, my next biggest holding is Thor. So
Boring is good here. All right.
And on that,
It's a good spot to end. Yeah. Well, that was I'm curious to see where actually both of these will end up. I do want to entertain that valuation exercise with you, Tom. For
yeah, we should do that.
plus, I'd be curious just for my own reference in the commercial real estate space, just see kind of what's going on there, and a deeper level. So, with that said, appreciate everyone for stopping by. Definitely let us know if you have any ideas for future episodes. You can leave a comment below or join our Discord, which is linked in the description, where you can pitch some topics there potentially. We'll be passing out some information pretty soon about a Berkshire meetup. I think it's just going to be me there, but we will do a Punch Card Berkshire meetup, planning for the Friday before the Saturday meeting. So Friday evening, we'll do some sort of pretty casual meetup, and it'll be great just to get a chance to meet fellow Punch Card people. So that'll be fun. Otherwise, subscribe, hit the like button, of course, if you haven't already, because that is very important to do. And if you haven't subscribed already, or if you have, go hit that bell icon as well, so you get a notification the next time we go live. Otherwise, thanks everyone, and see you next time.
Thanks for tuning in to Punch Card Investing. The contents of this show should not be used as investment advice or as a recommendation to invest in a particular security. Please consult with a licensed investment advisor if you need investment advice. All investments carry risk and the potential for monetary loss. Thank you, and see you next week.